Welcome everyone to another Saturday evaluation session. Once again, appreciate your time. There was a very solid Razor Energy call going on. So anyone that hopped over, appreciate it. This is also recorded. So I think both of them are. So feel free to hop back and forth. The Twitter Spaces audio will be recorded, and then the valuation session itself is recorded as well. It will be posted to the whitetundra.ca website as usual. I will try and get it. Usually if there's no crashes and I don't have to merge the files, I can get it out right away. But if there's any issues and I got to merge files, it just takes forever with the video processing. So I will try my best. A couple of disclaimers to start. I'm not an investment advisor, so everything here is my opinion. It's based on how I do things, how I value these companies. So just sharing that. Please do your own due diligence on these companies. Please verify all the data that's being shared today. Please check your own risk tolerance, your own portfolio construction. It is probably different to mine, in some cases very different to mine. So yeah, what I'm sharing today is just the companies themselves, how you construct them within your portfolio, within your risk tolerance. I will leave that up to you and your accountant and kind of go from there. Once again, everything is my opinion. So we'll just caveat everything with that. Like I said, the recording will be on whitetundra.ca. For anyone on the Twitter call, again, who wants to join the Zoom session and the visuals, it's also on whitetundra.ca. Scroll to the bottom, the Zoom link is on there. And then anyone on the Zoom that wants this exact spreadsheet here, which I will be using, there's an April 2nd update to it. And it was posted this morning. So please, if you have an older copy, you will have to download the newer copy with this European template with it. I do also have a mailing list where I send the latest Excel files and the PDFs and whatnot that we will be using today. So if you want to get on the mailing list, please let me know. I don't send anything other than that. So yeah, I'll just leave it at that. The portfolio that I have is fully transparent on the website. Again, it's right on the homepage, the White Tundra portfolio and my personal portfolio. I will have the April update coming out later today. A couple of the options were sold that were expiring in April. I added Whitecap, I added to Meg. So full disclosure, we'll just start with that. And I also participated in the private placement that I posted a couple days ago here. The White Tundra portfolio is completely private, so I don't take outside investments. So I'm very humbled by the emails of people wanting to invest with me, but it's not an open fund, and I appreciate the support. Feel free to interrupt me, ask questions on the chat. I do have the audio turned off for now, just in case there's some trolls or hackers come through. We did have one incident earlier. So I'll leave that off for now until we're a little bit later into the presentation. And then I'll open up the audio as well. So anyone that wants to chime in can. But for now, let's use the chat. I will not be taking any questions on Twitter Spaces. It screws up the audio on the recording. So once we're done the valuation session and the Q&A, we'll move to the Twitter Spaces and continue the conversation there. Feel free to message me any questions on these companies, on any other companies. We've covered about 35, I want to say, companies so far. Some have been covered twice with updates, which is great. And the recordings are again on the website under the archive seminars. They're on the YouTube channel as well. So feel free to check them out. I also love any suggestions for future companies. This company here, the one we'll be covering today, Serica Energy, it's not even listed on the TSX, but something that came up with the European gas, I guess, opportunity going on right now. It's not an opportunity for the consumer, obviously, but for the investor, strictly looking at investments. It was mentioned to me by Alexander Stahel and some other people as well in the DMs. So always happy to bring up new stuff and have a look as to the best I can. The results of these spreadsheets, I'm covering about 57 or 58 companies now. They are on the website as well under price targets. So if you're looking to run your own calculations and you want to compare kind of to what I ended up with, My price targets are on there. They do have a little bit of juice built in, let's say, based on what I'm seeing with the well results, with the management quality, upcoming catalysts, etc. So they're not going to be bang on, but they're going to be pretty close as a relative valuation tool. And then I always like saying this, for anyone that's an accountant or a portfolio manager attending these, the metrics that I use are not 100% accurate. They're 95% accurate. So there's little nuances, there's little changes in definitions that may not fit what you're using maybe, but that's just the way the spreadsheet is built. It's not supposed to be an end all be all. It's supposed to be a quick and dirty calculation. So you can get through a lot of companies, find the top 7, 10, 15 that you like, and then do deeper dives on them, adjust the calculations to be 100% accurate, and work on things like that. So with that, we'll get started. Thanks again for joining. I'll leave the chat open here for any questions and to kind of get started. Today's seminar, I'm going to run it a little bit different than the previous ones. I'm not going to go through the exact definitions of what I'm doing here. Just for the sake of time, these 3 companies, I want to look at the deeper dive portion of them a little bit more today, talk about their land positions, their acreage, etc., which I think is more important. So for anyone who is attending for the first time, you might have to watch one of the previous videos to get the exact understanding of what I'm doing here. In the first little bit here, the way the spreadsheet works, just for the sake of time, I want to focus on some of the maps and whatnot that I've got here. Just a little scrolling through them here, which I think is the hidden gem potential in these 3 companies. The free cash flows are great, obviously, but the things that people are missing by not doing deeper dives are what I kind of want to focus on a little bit more. So I'll just start with that. So please, if it's your first time and you're not following along 100%, please have a look at the last week's presentation or the 10 or 15 ones before. So yeah, that'll give you a better idea of exactly what I'm putting in here. But yeah, we'll get started here. So the first company we'll be doing is i3 Energy, one of my holdings. Full disclosure, I got in at 18.5 cents to this one. I was able to pick this one out just before it had its big increase. Not because I'm a genius, but just because I've been following it and I saw it kind of lagging. And there came a time they announced a dividend and I said, bang, this is the catalyst and we're gonna get in here. So yes, we'll start on the valuation session. So the company name again, i3 Energy. And again, anyone that wants to follow along with the exact spreadsheet, it's on the website. Scroll to the bottom under files and seminars. It's the first file, and you can follow along and input numbers as you go. So I like talking about i3 because they report in UK terms, so United Kingdom metrics. They only report every 6 months. So unlike Canadian companies that are forced to report every 3 months, the UK-based companies only report every 6 months. So there's this huge lag in data where we don't really have the latest information to work with, but that's where opportunity usually is. If you have companies that the analysts and that the average person is not willing to dive deeper into, these companies can sometimes lag and may not be valued at the right free cash flow potential or the right net asset value potential, which is great. If you can front run these latest updates, you can get in before the masses realize the incredible value that's in these companies. So yeah, with that, we'll kind of go on. All right, on, cool. So production, i3 is actually nice because they reported a Q4 operations update that a lot of people just missed. They didn't even bother to look at this, but really it gives you all you need. I don't think these are audited results, but it doesn't really matter because they're going to be close enough to what we need that we'll take them as gospel for now. So Q4 production is the first number we need, 18,229 BOEs a day. We have the liquids percentage is the next thing we need. So they don't give us the liquids percentage, but they give us the gas, the NGLs, and the oil. So we'll take the liquids, which is your oil, plus your NGLs, and we'll divide that by the total production. So 3,015 plus 5,210 divide by 18,229, you get roughly 46%. So I'll put that in there. And the light oil again is 3015, which is taken right off what they tell us right there. The NGLs is 5210, so I'm going to put that in. NGLs being natural gas liquids, so your propanes and your butanes and such. And the spreadsheet calculates gas production for you, so we'll leave that as is. Shares outstanding, they don't really give us a number, but if you go to any broker, or you go to Yahoo Finance, basically anything, basically we take the share price in Great Britain pounds, we'll divide it by the market cap, and we figure out that they have roughly 1.13 billion shares outstanding at 36 cents. And that gets us the market cap. So this 407 is going to be exactly equal to 233 million Great Britain pounds. So we're just reverse engineering it. Whatever broker you're with, or whether you want to go to Yahoo or Google, whatever, they will give you the shares as well. I just don't have it in front of me exactly. So take my word for it, and you can calculate this yourself as well. This update also that they recently put out doesn't have their net debt. So I've, again, reverse engineered their net debt based on what they reported for the first half of 2021. And then we have our CapEx, which is our capital expenditures for the second half of 2021. We have the net operating incomes for the second half of 2021. And we have reverse engineered to get a debt in Canadian dollars of roughly 30 million. Do I have an exact number? Can we verify that? No. But if you take their net debt at the end of the first half of 2021, you add in these net operating incomes, minus taxes and minus the G&A, which is the employee salaries, and we subtract the CapEx, we will end up at roughly $30 million of Canadian dollars net debt. Again, for the sake of time, I'm running through this a little bit faster because I want to talk about the maps. I want to talk about their actual acreage a lot more. I'm happy to break through this or break down this number. If anyone wants to reach out to me, I have an actual calculation, or feel free to do it yourself and verify with me. Their annual dividend is roughly 1.8 cents per year. So they pay roughly 0.15 cents a month. So multiply that by 12, you get about 1.8 cents per year. So it's about a 5% yield today, which is pretty good compared to some of the other companies. The I3 management is very aggressive in putting out these dividends, which is what I like. For anyone that knows me, I like companies that look at what's coming. They look at where the puck is going. They're not just paying down debt or doing, well, we'll see what happens. They actually know what's going to happen. They have a good idea of what's going to happen, and they plan accordingly right now instead of waiting for things to happen in that order. So adjusted funds flow, free cash flow, we don't have them. I3 doesn't report these metrics because they're a UK-based company, but we have net operating income. So what is net operating income? Net operating income is revenue minus royalties, minus operating cost, minus transportation, and minus processing. So basically, all the operating costs are subtracted from revenue already. Perfect. Well, that's pretty good. But you know what? I can't tell you how many people would probably not even care to do the math. Even though they're given net operating income, they'll say, this is too complicated. This company is just too hard to value. So we're just not even going to look at it. Great. I am able to buy shares cheaper because of people's laziness. So net operating income is almost adjusted funds flow, but not quite. So what's the difference? The difference is net operating income. We need to subtract G&A, which is employee salaries, office expenses, etc. And we need to subtract interest expenses to get to adjusted funds flow. Again, roughly. There's going to be other things that if you're an accountant, you think we might be missing, but it doesn't make a material difference. So we will just take net operating income, which is $31 million US, which is $40 million Canadian, roughly. We subtract G&A. How much is G&A? How much can the employee salaries be? I take $2 a barrel, so, or $2 a BOE. So $2 multiplied by 18,229 BOEs for the quarter, multiplied by 92 days in Q4, $3 million roughly. We also need to subtract interest. So $30 million multiplied by 5%, let's say. So they're paying $1.5 million of interest per year. Take 1/4 of that for the quarter, roughly $400,000. So G&A, $3.5 million, interest, $400,000. We end up with a G&A plus interest of $4 million Canadian. Net operating income, again, 31 US, which is 40 Canadian, minus 4 G&A and interest, $36 million is the adjusted funds flow. Okay. Free cash flow. To get to free cash flow, we need to subtract capital cost. So if we go to Q4, they only spent $2 million. And you might think, wow, that's really weird. Like that's very little spend. That's not a correct number. If we put 2 million in there, we're going to get a super jacked up number for our free cash flow. It's not correct. We need to go and look at 2022. So in 2022, they're spending $47 million for the year. $47 million US is 60 Canadian, roughly. 60 million dollars Canadian per year is $15 million a quarter. So we take 36, we subtract $15 million a quarter, we get 21 of free cash flow. The dividend for the last quarter is roughly 5 million. So they could 4 times their dividend today. They have publicly said twice now that a lot of their extra free cash flow will go to special dividends. So we can expect that this dividend is probably going to be increased. And when management publicly in news releases will tell you that they might or they will use excess free cash flow for dividends, that gives you a very positive outlook going forward, especially because they already have a dividend. When they put out this 1.8 cents dividend, it was a 10.2% yield. This is the only company that has put out a 10% plus dividend yield, and management is going to be very aggressive going forward on this. So great. Hedging impact. We don't really know the hedging impact, unfortunately. So I'm just going to leave it blank. We're being conservative because they probably lost money on hedging. A lot of companies lost money on Q4 2021 hedging. We don't have the information. We're going to leave it for now. What was the WTI pricing that they got this $21 million of free cash flow at? So for anyone that's done these valuations with me, you know it's the same for every company. Every company got 77.19 for last quarter. So I'm just going to leave it there. To understand where that number comes from, again, please check out one of the previous presentations and we can explain it a little bit more as to where I got this number. But if one company got $77, it's basically consistent across the entire spectrum of companies. What's the strip pricing? So what is the pricing for WTI in the future? if I sold a barrel a month for the next 12 months, what WTI pricing can I expect to get? So we go to a website called rbcrichardsonbar.com. And right here, the 12-month strip is 93.30. That's exactly what I'm going to put in, 93.30. If I sold 1 barrel of oil for the next 12 months and averaged it out, I would get $93.30 US. NGLs. I3 has a lot of NGL production. About 25% of their production is NGL. So we need to know what pricing they got for NGL. And for that, we go up here. They tell us that for their liquids, they got $35.86 a barrel US. I3 reports everything in US. You want to convert it, the spreadsheet also. Please look at the units. Look at the $1 million. Everything in the spreadsheet must be as the units ask for. There's some explanations here as to what I'm doing here and the numbers that need to be put in. So again, 35.86. What's the strip pricing for NGL? We again go to RBC, richardsonbar.com, and we see right here, NGL pricing into the future is 51.46. It's not 100% accurate because Mont Belvieu is in Texas. So I3 doesn't sell everything at Texas pricing, but it's close enough. So we'll take it for now, 51.46. So I'm going to put 51.46 in there for the strip pricing. The next thing we need is the gas pricing. I'm again going to steal this number from the other companies, although I think I3 reports, so they did report it, 372 an MCF. In Canadian dollars, roughly 4.5. So last quarter's gas pricing, 4.5. Again, I took 372 US dollars, converted it to Canadian dollars, roughly. What is the projected gas price? We need the strip pricing for gas. The same way we got strip pricing for oil, we need strip pricing for gas. And where do we get that from? There's a website, gasalberta.com, market prices. The same way we calculated oil strip pricing. We take the next 12 months and we average them. So this is month by month, take the next 12 and we average them. So add up each month, divide by 12. It's a simple arithmetic average. We end up at roughly 575, which is, for those in the Canadian AECO markets, that's the best AECO pricing we've had in a long, long time. When you ask why are companies like Crew and Spartan Delta and Pine Cliff doing really well, this is why. We're having really strong Canadian gas pricing and people are not paying attention at all. If you can pay attention, if you can front run these things, you can make a lot of money. Just my opinion. This is not fact. This is what I'm thinking and what I feel is going to happen. And that's it. We're done. So where do we end up? We end up with annualized free cash flows. That's this first row here. That tells you that this free cash flow annualized at this gas pricing and at these oil pricings, at these oil pricings, give you this free cash flow yield. So what does free cash flow yield mean? Free cash flow yield tells you of the company's entire value, which is their enterprise value, how much % of that are they generating in free cash? Okay, why is that important? Because this percentage is exactly what the company can give back to you in dividends, in share buybacks, in debt deleveraging, in acquisitions. Look at that, we have a hacker here. So we'll not let them in the room. A sec here. Perfect. So Dirk, if you can hear me, please don't let that Tim in the room. So yeah, this percentage is exactly exactly what can come back to you in terms of dividends, buybacks, and debt payments. At strip pricing, about 39% can come back to you today with dividends, share buybacks, debt deleveraging. We would love a 39% dividend. That would be amazing. It would blow everything out of the water. Any other companies that are currently in the Canadian space, but it's not really fair to expect 39%. So what can we expect? I expect a 12.5% yield. And why is that? 12.5% gets me a nice 5, 6, 7% dividend. It gets me a 4 to 5% buyback, and it gets me 1%, for small debt payments, covers the interest payments, and maybe little bolt-on acquisitions here and there. And that's what I want. For a company like i3, they already have very little debt to begin with. Basically, all of this money is for share buybacks and dividends. What else are they going to do other than acquisitions, possibly? So it's a great place to be. I want 12.5%. What does 12.5% mean? 12.5% means that in 8 years, the company is going to return the entire value of the company in dividends and share buybacks. 12.5% times 8 equals 1, 100%. So the 8 multiple is what we use. If you want a 17% return, you think these companies are risky, you want 17%, just calculate how many years it takes for that 17% to get to 100%. So 17% times 6 is 100%. You use a 6 multiple. If you want a 25% yield, 25% times 4 is 100%. So you're using a FCF times 4 multiple. I like 8, especially for companies that are almost debt-free. 8 is very safe. I think the companies will re-rate to 8 once money comes in the sector, once the macro outlook is more solid going forward, once we have cash flows for 3, 4, 5 quarters in a row. I think we will re-rate to 8. So I'm going to use 8. So I take this last quarter's free cash flow, I multiply it by 8. That's what the company is worth, but I need to subtract the debt from it. So we subtract debt. That's what the shares are worth. So we subtract debt, and then we divide that by the number of shares currently outstanding. We get a fair share price for the equity. And that's basically it. That fair share price is going to be different, obviously, because the company generates different cash flow, free cash flow at different oil pricing. If you think the gas price is going to be $7, the spreadsheet will adjust accordingly. So the spreadsheet, again, is very flexible. You can put in whatever number you want in here for your projected gas price. This exchange rate is wrong, so I'll adjust that. And any yellow box is flexible. You can put in whatever you want, and the spreadsheet will adjust accordingly. So that's basically it. That's how the spreadsheet does its calculations. That's how I look at my 57 companies, 58 companies to begin with. You can use this for mining companies. You can use this for uranium companies. You can use it for gold. You can use it for potash, helium, whatever you want. It doesn't matter. The free cash flow times 8 model is consistent. So I'll go through some questions here. DS is asking, is it time to eliminate $40 to $50 oil? Yes, I will be making changes as I go. The reason I have $40 oil in there is to show you when the equity becomes worthless. So at $40 oil, the shares are only worth 11 cents. At $30 oil, that probably goes in the negative. So that's when the equity becomes worthless. And when people tell you, oh, so-and-so company is only reflecting a $60 oil environment, this is what they're telling you. At $60 oil and strip gas, we're still not at our fair share price yet. You might say, well, this company is just going to lag forever. Well, you can either think of it that way, or you can think of it as an opportunity of you getting in a really, really good deal. You're getting in at a really good pricing with very little downside, with a 5% dividend yield built in. So if the share price drops in half, that's a 10% yield. I don't think companies are going to stay at 10% yield for very long. So again, just my opinion. When I say you can do this or you can do that, I mean that as my opinion as a person, not that you should go out and start doing this today. So please keep that in mind. And that's where we are. What else here? So do I think that the i3's money could be allocated to drilling? Yes, I think they can spend some of this money on drilling, but at strip pricing, they're generating 3 times their current capital program in free cash flow after capital. They have a lot of money here. Even if they jammed another 60 million into drilling, they still have $110 million of free cash flow. So maybe highlights the opportunity that we have here. Keep in mind that this is a UK-based company. Yes, correct. Dividends are very important to UK-based investors. Hence my confidence, why I think management really cares about the dividend, and I think it's going to get higher and higher as we go. Are you changing your FCF multiple of 8? I use 8 for everything. Every company I model, I use 8 times. Where I adjust it is in my own thinking of whether I'm going to buy the company or not. So if there's company A and company B, both are on free cash flow multiples of 8, but company B is more risky, yet it doesn't give me additional upside, I'm going to buy company A. So I compare everything apples to apples, but I'll throw out some apples if they're more risky, if that kind of makes sense of how I look at it. And Dirk explained exactly what I'm thinking right there. So great. Yeah, so I'll talk about the inventory and the reserve life here as I go. I will also adjust for the 2022 forecast as I go. So everyone's reading my mind here. Scary and good at the same time. The other model we use is the adjusted funds flow model. So the nice thing about free cash flow is you don't need to think about capital efficiencies. You don't need to take decline rates into account. You don't need to take the asset quality into account. Free cash flow, because it's after capital, already does the work for you. But there's some people who know the assets, they know the fields, they know the decline rates more. They want to look at adjusted funds flow. So I have the adjusted funds flow times more model as well put in here. So anyone that wants to use this, I only use free cash flow times 8, but you will see people like Eric Nuttall talking about cash flow, talking about adjusted funds flow, cash flow from operations. This is what they're using. They're using adjusted funds flow models instead. Perfect. So that's that. Now, i3 Energy does hedge their production. That means that they're not getting this exact price that you see on the screen here. If the price goes to 120, they're not going to get $120 a barrel because they've hedged barrels. They've made contracts in the future to sell oil or gas at certain pricing. So we need to take that into account for the next 12 months. If we go back to their update here, they tell us the exact hedging, which is awesome. So 2022, they've hedged roughly 2,000 barrels a day, 740,000 divide by 365, 2,000 barrels a day at 90.91. So going to take exactly what they tell me and put it into the hedging part of it. For gas, same thing, 11 million gigajoules divide by 365 gives me the gigajoules per day at this price. So that's exactly what I'm going to put in. And if you do the math, you'll find that's exactly where you end up as well. The propane I'm going to leave out because the propane price they're getting, they don't have many barrels hedged anyway. It's only 500 barrels a day for a company producing 5,000. So I'm just going to leave it out for now. And the price they're getting is pretty good. So it's probably right at market price. So I'll leave it out for now. Perfect. So that gives us the hedging loss. So that's what they're losing on oil at these pricings. Gas, that's what they're losing on the gas hedges at this pricing. We have our hedge adjusted free cash flow. So this was pre-hedging. This is post-hedging. The same table, just post-hedging. Okay, so I will talk about the North Sea asset here later on. Please reiterate your 12.5% yield expectation. Yeah, so I want 12.5% yield, and that could be a 12.5% dividend. It could be a 12.5% share buyback. It could be a mixture of the two. I want roughly a 5 to 6% dividend. I want roughly a 5 to 6% buyback. Now, is i3 Energy going to do a buyback? I don't think so. I think they probably put all the money to the dividend. So you're getting an 8, 10, 12% dividend, which I think is very competitive in the oil space. I think the companies can stay there. Are they all going to re-rate to 5% yields? No, I don't think so. But if the company puts out a 12% dividend, are you pretty safe where you are? I think so. I think the share price doesn't fall. If they put out a 12.5% yield, I don't think the share price falls. So that's where you want to be. And that's what I'm expecting as a minimum. You might want more. And so you use a 6% or a 6 multiple on the free cash flow. I use 8 because I want 12.5%. That's the minimum I expect. If I get more, great. Okay. We've adjusted for hedging. We also need to adjust for production growth. i3 Energy's production. Okay, so right now, 25% of the free cash flow is going to the dividend. $5 million out of 21, roughly. That's at last quarter's pricing. At looking into the future at strip pricing, $5 million annualized is 20 million. 20 million out of 170 is going to the dividend. Only about 12%-ish is going to the dividend right now. So they can 8x their dividend right now if they want it. Sounds like a pretty good position to be in. That's at strip pricing. If oil goes higher, obviously that adjusts accordingly. So production growth, we've taken hedging into account. We need to take the production growth into account. So what is the production growth for 2022? Well, let's see. They say that for, where is it? The program is expected to deliver average production in 2022 above 20,000 BOEs per day. Okay. For Q4, we had 18,229, above 20,000. Let's say it's 20,229. So it's 2,000 barrels more, 2,000 BOEs more, I should say. So we add in 2,000 BOEs. And what netback are they getting for these BOEs? That's the next question. So how much money are they making per BOE for this growth? How do we calculate that? So the way we're going to calculate that is, again, reverse engineer based on Q4 numbers. So in Q4, they got 31.5 million of NOI. So 31.5 million multiplied by the exchange rate to get it in Canadian dollars is the money they made in Q4. We're going to divide that by the number of barrels they produced in Q4 to get how much money did they make per barrel or per BOE. And there was 92 days last quarter. So how much money did they make per BOE per day? 23.48 is what they made. Okay. How much are they going to make on this 2,000 growth BOEs? So they made 23.5 at this gas pricing and this oil pricing. Pricing has obviously gone up by about 25 to 30%. So let's just increase that by 25%. 23.5 plus multiplied by an extra 25%, roughly $28, $29 a BOE. Is that the right number to use? No, because i3's Q4 production was 46% liquids. Liquids get a way better pricing per BOE. i3's production increase is 65% oil and liquids. So the new production coming online is less gas, more oil. Oil gets a higher dollar per BOE. So we're at 29, let's add another $3 or $4 a BOE because it's more oily production coming online. So we'll put 33. You can use 29 if you want. You can use 25. You can use whatever number you figure. I'm trying to be sort of accurate. John is asking a question about hedging. So I don't have a good answer for you, John. That's management teams do their own thing with hedging. I've been a big proponent of just buying puts, and I'm gonna be pushing that as we go along. As to why they don't do it, conservative, way too conservative. They don't want to put up the money up front. Dirk has a really good comment on hedging, so please read that if you're more concerned about the hedging. Okay, so yeah, so that's where we are. We ended up with our pre-hedging numbers. We ended up with our post-hedging numbers. And now we end up with our post-hedging, post-production growth numbers. Okay, so anyone looking for the audio? Okay, so post-hedging, post-production growth, the fair share price at $80 is 88 cents, $90 99 cents, $100 is $1.10, and at 120 it's $1.32. This purple, so let me go back a bit. This blue boxes are at your strip gas pricing. The purple boxes are with the gas pricing adjusted as well. These numbers are exactly what go into the price target spreadsheet that I've uploaded to my website. So for anyone trying to understand where those come up with, this is exactly what I do. 2022 capital program, 47 million US was the number we had right here. So 47 million 2022 capital. In Canadian dollars is 60. You can play around with these numbers as you go. You want to compare companies, etc. That's what we have for 2022 yields and 2023 yields. Compared to the previous other seminars we've done, that is amazing. There's been very few companies that show that good of a dividend or free cash flow yield looking into 2023. We're already in Q2 of 2022. If you have a 12 to 24 month time frame for your investments, that is the number that I focus on. So when people ask me, well, you've already doubled your i3, why aren't you selling? Right there, bang, bang, bang. That's all you need to know. So I don't just look at 2022 because hedging skews things, the near-term issues skew things. I look at 2023 as well. Now that we're into Q2, I want to position accordingly for these companies where the hedges drop off, where they generate so much free cash in 2022 that the 2023 numbers look absolutely mind-boggling. And that's where I am. Alden is asking, what happens if we change the A code to $6? Okay, so we'll change it to $6. It adds roughly $6 million here. If you think something crazy is going to happen, ACO is going to hit $10, that's what you put in. You can put in whatever number you want. Okay. There's a reason I3 is in my portfolio. So I'll leave it at that. To your question, Sridhar, this is one of the best picks, yes, that I found for a company looking for dividends. I think this is a very good pick, especially because people are not paying attention. They're not even willing to put in the basic amount of work to value this company. So if I can get shares so cheap, yeah, I'm going to keep buying, because what's going to happen is 3 months down the road, the company is going to put out a dividend yield of 12 or 14%, and the share price is again going to double and re-rate back to that 6-7% yield where we are today. This is a very aggressive management team. They put out a 10.2% dividend when they first put it out, and the share price within 3 months re-rated to a 5% yield. They can 8x their dividend at strip pricing. What if they came out and put out a 20% yield tomorrow? What if they put out a 25% yield? Yeah, this is going to be pretty crazy here as to what's going on. Yes, the dividend is monthly. I'll talk about the reserves here. Give me a sec. Okay. Yeah, and I'll talk about the insider ownership as well. So this is what I3 is doing. They bought all this junk from Cenovus, from Gain Energy, from Toscana, Ferenz over the last 18 months. They got it at absolutely amazing pricing. They bought their production at roughly $7,000 a BOE. Production today is selling for $35,000, $40,000, $50,000 a BOE. They got the production cheap. They got assets with optimization potential. Cenovus doesn't have time to do all this. They're too busy making money with their refineries. They're too busy with their SAGD projects. They don't care. So they sold these assets, and I3 has a very experienced Canadian team looking for these assets. How can we optimize them? These wells have been shut in for 10 years. How can we get them back online? They're working very hard, and look what they have done. Wells with zero production, bang, come on at 200 BOEs a day. They don't decline very much. They only decline about 50% in the year, which is pretty big decline. But when you go from 0 to 200 for very cheap, I mean, these wells are already drilled. They're already completed. You just go in there, you do a little clean out, you refrac them, you fix up the pump, $15,000, $20,000, and you have very nice production coming online. That's what they're doing. I can tell you that for a fact. This is some of the best netbacks you can get. You don't have to worry about drilling risk, exploration risk, a geological risk. Why bother? Just go in, find these wells that have been shut in, restart them, optimize them, and you get loads of production for very cheap. So sounds like a pretty good deal to me. And yes, so the management, the CEO is a finance guy, yeah. And John Festival is on the board. Very successful. John Festival is very, very successful individual. I'll leave it at that because I don't want to get dragged down that rabbit hole. And thank you to Rock Creek for this information. Rock Creek on Twitter. Many of you know him, very great due diligence, great maps. I rely on his research a lot. So if you want more of this kind of information, please give him a follow. Rock Creek Freak on Twitter. Yeah, reach out to him for all these technical questions. he can help you a lot. And look at his graphs, look at his Twitter posts. Very, very great, knowledgeable guy. This is i3's water flood acreage in Carmangay. You can see how they've optimized it. They've run these wells right across the entire field, very low decline. It'll produce forever. This field will produce forever at somewhere between 100 and 200 barrels, I think, a day. It'll produce forever. No work needed. Deep Basin. This is what they bought from Cenovus. When I talk about optimization potential, the green is i3 land. So they've got all these wells they can optimize, you know, bring on at 200 BOEs a day, at 40 BOEs a day, at 100 BOEs a day. All the black dots are the maps. They got tons of these wells all over the place. They got untapped land. So look at these green boxes with no black dots on them. That's untapped land. So right here, all the stuff down here, it's reserves. This is all reserves that is just sitting there. Nobody bothered to drill into them. So everyone asking about reserves, I mean, they've got lots of land. They've got lots of optimization. They've got lots of work to do here. They just drilled 3 wells, I believe, in 52.4 or 42.5 right here. These are new wells here, Glock wells coming online. They might already be online. So they're doing everything. They're doing optimizations. They're doing new drills. They're looking for really nice acquisitions for cheap. They're doing everything right. I trust management. I think they have the right understanding. They know what the people want. They know what the investors want. They've got the dividend out. What else can you really ask for? This is Wapiti. This is where I cut my teeth, 2019 and 2020. 2019 and 2020, and 2021 a bit. Worked this field for about 1.5 years, 2 years. Right here was my modern resources wells that I used to operate, 67.8, 66.8. Some of my field was right in here. This acreage is pretty good acreage. This is really good. And they've got a lot of land here in the Wapiti Cardium, in the Dunvegan, I believe, here as well with Cardinal. Yeah, don't quote me on that, but I think it's with Cardinal. So lots of land, as you can see. Look at how many wells you can jam into these sections, and look at these green open lands. Yeah, lots of potential here. Great wells, probably 6-month paybacks. There's lots of facilities in the area. Yeah, great. So questions here, you should always use 3 months ended numbers. They're the latest numbers you have, so always use that. They will report April 15th, I believe, is the second half of 2021 results. And we will have Graham Heath on Twitter Spaces shortly after that. It's already confirmed, but he wants to wait until the results are out, which I totally agree with. So we will wait for that. Thanks to Gary for setting me up with the Graham and making the introduction. What's the forecast for maintenance CapEx? 60 million is a growth CapEx, so I would say 30 million is probably a good maintenance CapEx. The free cash flow is what I talked about in the spreadsheet, so it changes based on the strip pricing and such. So I'll let you check that out, Afonso, if you wouldn't mind. April 15th, roughly, is when the second half 2021 results will be out, roughly. I was told mid-April. I don't have the exact date, unfortunately. Is each square block one section? This square block is actually 36 sections. It's 6 miles by 6 miles. So this is 36, each of these boxes is one section. This small box here, here, but this square box is 36 sections. So 6 miles by 6 miles. Yeah, it's a township. Yep, you bet. Clearwater. This is Clearwater, the up and coming, the new sexy play, as they say. Everyone is getting crazy and they want to drill this up, make some money. I3 has a 50-50 joint venture with Rubelite. That's another new company, Rubelite. They have a lot of Clearwater acreage. I believe these are the wells here. They're drilling 3 wells, 2 or 3 wells. 2 of them have come online at 80 barrels a day. Not the best, but they still pay out in like 6 months to 8 months. Still pretty good wells. Multi-leg horizontals. That's what we mean when we talk about multi-leg horizontals. 1 vertical with 6 to 8 horizontals off the same vertical well. More Clearwater stuff here. You can see how many wells they jam into these sections and these townships. Again, the green is the I3 land. This is Tamarack Valley's Nipissey. Very, very prolific acreage. And look at how much land I3 has. Some of it has been depressurized due to poor operations in the past, but we'll see what they can do with it. Like, this management team is very engineering technically strong. They know what they're doing. I know some of their field guys, their field foremen, their field operators. These people understand what's going on. They are very open to new technologies, playing around with things, trying to find more production. It's a very committed crew. So I am very confident that they will find a way to produce lots of oil through some of these lands they have. They paid $300 a hectare for this land. Other land in this area is selling for $5,000 a hectare. This management team is taking advantage of opportunities. They look at the wells, they look at land sales, they look at acquisitions. Everything they've done has been a deal. Like, I couldn't have done it any better. I don't think any management team could have done it any better. For somebody who are based out of the UK, like, this is amazing what they've done here. They're basically like a mini CNRL. They don't overpay for anything. They optimize everything. Every dollar they put in, we get $2, $3, $5, $7 back. Like, it's just amazing what they've done here. And I'm very happy with this management team. Like, this was top tier, top level stuff. This is the Simonette area. So why am I talking about the Simonette? People know that I love Spartan Delta. I love their lands. I've talked about this natural fracture that Spartan Delta drills into with Montney wells with no decline rate. For those who have been paying attention, that is in 62-4, west of the 6th. 62-4, so just a little bit to the west here. This is all Montney. If that natural fracture extends eastward a bit, I3 Energy might be in that same land here and in the same land here. Do we know? Are they there yet? We don't know. Is it a nice positive upside catalyst with lots of land? Yeah, hell yeah. Like, that's what I like. A management team that knows what they're doing with land with really good adjacent results, offsetting results. Great, awesome. Spartan Delta increased their capital program for 2022 to add $30 million. So they added, their capital budget was $300 million. They increased it to $330. The extra $30 million is all going in the Simonette. Seems to be pretty good area. Seems like Spartan Delta, which has all this Montney acreage, they're spending money in the Simonette. Maybe they've seen something there. Maybe they've seen that this natural fracture extends eastward. Maybe they want to build more facilities here. And I3 has a ton of land here. Brings a smile to my face. There's nothing else I can say. These are things, the analysts won't tell you this. The investors, a lot of them don't know this, but by looking at the lands, by hypothesizing what's here, by looking at what other companies are doing in the area, my shares of I3 are not for sale. They're locked for the next 24 months. they're locked. I mean, I might sell my Synovus, I might sell my other shares when I think they become relatively good value. I3, I'm not selling because the potential here, give the management time, give them 2 years, let them prove out the acreage, let them drill nice wells, let the plays pan out. I'll just leave it be. It can sit there, it can pay me my 5%, maybe 10%, maybe 15% in the next few months, and just leave it there. Let it do its thing. I'm not touching them. They're not for sale. Another catalyst, the North Sea. The share price got hammered. It's down roughly 20% once this news came out. And why? Why is the share price down 20%? Because people panic. People don't understand what's going on. They just say, well, I'm done. I made my 100%, I'm selling. Great, I'm happy to pick up more shares. So Captain Field and Blake Field, two of the best prolific fields in the North Sea, offshore UK. Kane is owned by Repsol. They're gonna make a investment decision in Q3. They think there's oil there. They wanna get the development done. The final decision is gonna be made in Q3. Serenity, that's the I3 field. It's right in the middle of this big oil producing acreage, this oil producing basin. Right there, smack dab in the middle of it, there's this pipeline here. They can connect, bang, right there. And what's even better, they convinced another company to pay 46% of the expenses in exchange for only 25% of the oil. Seems like a pretty positive sign. Seems like this other company thinks there's oil there. If you can convince your friend to put in 46% of his money into your business in exchange for only 25% of the business, that seems to think that your business is probably going to make some money, right? You believe it and your friend believes it. So why did the company sell off on that? Because the management team drilled a couple of poor holes in the North Sea in 2017 or something. So is it relevant? Not really, because they've had 3 years, 4 years, 5 years to figure out exactly where the oil is. When you explore for oil, there's always risk that you don't find it. They've now found the oil. They've convinced a partner to invest in it. So seems like a pretty great place to be. Like this company, I just don't understand. It's like people think it's UK based. People think it's doesn't have Canadian management. They think it's all kinds of junk assets all over the place, and they just ignore it. I'm happy to buy. I'm going to be buying more shares. If it stays at this range, I'll be happy to buy more. I know my friends and family have bought a lot of shares. So again, no recommendation. Please do your own due diligence. I can only share my opinion on it, but everything I see here is just untapped potential, untapped catalysts, and great positioning into the future. So I'll leave it there. Is there any questions on I3? Oh, 3 shareholders own 50% of I3. 6 shareholders own 65% of I3. To my knowledge, they have not sold a single share despite the share price doubling in the last 3 months. Pretty tight float. It's a pretty tight float. People are holding on. It's people have so much confidence that they're putting 26%, they're holding 26% of the company's shares and 14%. Cairn Capital is a huge investment fund. They're pretty knowledgeable as to what they're doing. Again, I don't want to be here not discussing the negatives, but I really don't see a negative here. There's so much positives. I'm happy to invest. I bought when I didn't even know this stuff about these assets. Now that I'm learning more and more and more, yeah, I'm pretty bullish on this name. I think there's a lot of bullishness I have, and I will definitely look at buying more shares if further capital frees up and I get an opportunity. Could that much ownership between so few names be a risk? Maybe. You can look at things as negatives. You can look at things as positives. It's not up to me to make that decision for you. To me, it's a positive. I think these companies are going to be in here for the long run. They know all this stuff that I talked about. It's the Canadian investors and the American investors that maybe are not as aware of what's going on. But the London investors, I think, know, because they've been following i3 for 5 years, 5 to 7 years. Whereas the Canadian investors only now got a chance to look at this company in the last 18 months. So we don't have as much of a background and history on it. Whereas some of the London investors and the UK investors know this. So you're not seeing the yield at 5%. I don't really know what to tell you. The yield is 5%. So I can guarantee you that. Offshore drilling engineer tells there's about a 22% drilling success rate. Yeah, I don't know what the drilling success rate is. i3's exposure to the play is roughly $12 million Canadian. So they generate roughly at strip, or sorry, let me go to the unhedged number. So they generate roughly 119. Hang on, this is wrong. They generate $170 million of free cash flow at strip. If they can put $12 million to delineate a North Sea play that could be worth $500, $600, $700 million. I don't know what the exact number is, but maybe, $300 million, maybe $200 million. If I could spend 10 to get a 22% chance at 200 million, maybe it's worth it. It's worth it. And with the work that they've done, I would maybe say it's maybe more than 22%, but let's go conservative. That's still the expected value there is really good. Are you aware of any downside to using OTC markets? I've never invested in OTC markets, so I honestly couldn't tell you at this point. But I don't see there being any problem. How long would it take for the North Sea assets to come online? I also don't know that. I think if they make a discovery, it will be reflected in the share price right away. And then how they develop it, maybe a year, maybe 2 years. It's going to take some time. I think it's going to take at least a year, 18 months to 2 years, I would say, for a new platform to come online. Right on, cool. So I'll stop it there. I'll move on to Vermilion here and kind of go from there. So exact same spreadsheet, except I've adjusted it for the European gas exposure. Yeah, no, thank you. Thank you for attending. Always appreciate it. I see we have, it's a good thing that I upped the Zoom limit because people would have been locked out. So thank you again. Management ownership, I don't know, boss, but I can get back to you. I don't know what the management ownership is here off the top of my head. Okay, so Vermilion, the one I've probably been emailed the most about over the last couple of weeks since I put out my price targets. Well, people were saying that I made a mistake. I put a 1 in front of all my price targets. No, I'm very confident in putting out these price targets. I'm not trying to seem crazy, so I'm gonna back it up here and tell you why the price target is so high. And I've publicly spoken about the banks before. The banks are trying not to be wrong. That's their mandate. TD, RBC, BMO, Their whole goal is to not be wrong. That's it. My goal is to be right. No, my goal is to make money. It's to find companies that are undervalued, that the banks are not willing to stick their neck out for them. I'll stick my neck out for them and I'll buy shares in them. I'll put my money where my mouth is. And that's the mandate that I run with. And I'll show you why I believe that, because I think that's important. When people are throwing out when people are throwing out price targets that are much different than the current share price, I think it's my responsibility, my obligation to back it up. And that's exactly what I'm going to do here. It's funny because the last time I covered Vermilion, they'd go and make a deal the next day. And this time, once I put Vermilion on my companies to cover, they go out and make a deal the next day. So maybe the crystal ball is working really well. Okay. Q4 production, 84,417. So 84,417. Oil, 36,264. It's all light oil for the most part. So I'll put it in there. NGLs, 8,461. Liquids percent, 3. So the way we calculate liquids percent, again, take your liquids, add them up, divide them by the total BOEs, you get your liquids percentage. Shares outstanding, so shares outstanding at the end of Q4, 162 million. Share price, so 27.02. Put that in there. It's the exact same concept. Once you run through the spreadsheet 2 or 3 times, it'll take you like 10 minutes, 10, 15 minutes to go through this. You know, bang, 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 you put all the information in and it spits it out right away for you. So, you know, if you want to get familiar with this model, yeah, try it out. The spreadsheet is available again on the website, whitetundra.ca. Scroll to the bottom under files. It's right there. Feel free to play around with it. I love when I get some cool little people who made adjustments. They've run their own numbers. They've made graphs off it. Yeah, awesome. Okay, so the next thing we need is the net debt, 1,645 billion. So we put that in there. Dividend, their annual dividend is 24 cents a year. That's what they've said, 6 cents a quarter. It just came out last quarter. Q1 was the first one with it, so that's that. Adjusted funds flow. We have cash flow from operating activities is the exact same, or no, this one here, funds flows, 322, free cash flow, 176. 322, 176. Hedging impact. We want to know how much free cash flow did the company generate without the financial impacts, just the operational perspective. So we need to back hedging out of it. So how much money did they lose on hedging? Realized. You always want to look at realized loss, what they actually lost on hedging in Q4. So where do we have it here? Right here. Realized loss on derivatives, $190 million was lost on derivatives, which is hedging in Q4. Okay, strip pricing again, always the same. Last quarter pricing, always the same. Strip pricing, we pulled it up for I3, 93.30. NGL, what money did they get for the NGLs? So let's see here. Do they give that to us? Yeah, so realized prices, $47 Canadian for a barrel of NGL. It's about 38 US. Strip pricing, 51. We calculated that before when we did I3, 51.46. So we put that in. Percent of AECO production. So Vermilion has both Canadian oil and or Canadian gas and European gas. We need to split them out. Canadian gas gets a lot less money than European gas. So let's put it in here based on how much they get for each. So well, hang on. So we look at the pro forma core acquisition. North American gas is roughly 26% of their total. European gas is 22%. So out of the total gas, about 55% is North American, about 45% is European, okay? So 55% is AECO, 45% is other gas. AECO gas, we know last quarter was 451, based on the I3 numbers, based on the Crescent Point numbers, based on the Whitecap numbers, it's always the same. The projected gas price, 575. Again, gasalberta.com, add the next 12 months, divide by 12, 575. Other gas, this is the important one. So Q4 2021, TTF and NBP. Those are the European gas streams. They got Canadian dollars, about $38 an MCF in Q4. So we're gonna put that in there. 38 other gas price. What's the projected gas price? So CMEgroup.com, same exact thing. Add the next 12 months, divide by 12. This is US dollars. So we take the next 12 months, it's roughly 40. 40 in Canadian dollars, 50. That's what I'm gonna put in here. Again, the exact same calculation. Annualized free cash flow yield, multiply by 8 because I'm looking for a 12.5% return. Subtract your debt from it. And we kind of get the share prices that we were talking about that are in the price target spreadsheet. But we need to adjust them. These are pre-hedging, pre-production growth. So let's adjust them. We look at their hedging. Right here. This is the 2022 hedging book right now. Pro forma, the core acquisition. Okay, so this much percent of their production at this pricing. Okay, so I'm just gonna copy it because I've done the math on the hedging already. That's exactly what it is. 1835, 105. Okay, 1835, roughly 105. Okay, that's where we are. I've copied exactly their hedging book and put it in here. So I get this question every time. What if you use a 6 multiple instead of 8? There you go. It's that easy. If you're running the spreadsheet yourself, that's all you have to do. If you want to use a 4 multiple, it's still very, very undervalued. We put the hedging in. Look at the hedging losses. European gas has just skyrocketed. It's done really, really well. So they're going to lose a lot of money in 2022. 2023, instead of 60% being hedged, only 30% is hedged. So again, if you have a 12 to 24 month holding time frame, maybe look into the future and kind of what's going on. You can front run the hedges dropping off. So we're already in April. You might want to look, that far out and run forward numbers into 2023. But anyways, so that's the hedging. Production growth. Vermilion has made 2 acquisitions, the Corrib acquisition and the Leucrotta acquisition. Neither of them are reflected in this Q4 production number. The Corrib acquisition is effective as of January 1st, 2022, and the Leucrotta acquisition is effective somewhere in April or May. I'm not too sure. But it's got to be put into the 2022 numbers. So how much are they making off this? So we've already taken the hedges into account post-Corrib. Pro forma Corrib, the numbers are already taken into account. So when we put numbers in on our production growth, we need to put in the unhedged numbers. Okay, I want to make that clear. We've already impacted the numbers for hedging once. So we need to put in unhedged numbers here. Okay, how much production are they growing? Corrib is adding roughly 7,000 BOEs at what pricing per BOE? $50 Canadian per MMBTU, right? For the European gas, it was $40 an MMBTU US, which is $50 Canadian. Convert $50 an MMBTU to BOEs, you multiply by roughly 6. So they're getting roughly $300 an MMBTU. Ireland has 0 royalties and a very low tax rate. Therefore, if they're getting $300 revenue a BOE, that's about what they're getting after operating costs. So we'll take $50 a BOE operating cost, which is not true, but let's be conservative. So 7,000 BOEs at $250 net back. Okay. Yeah, so again, Dark, if you're on there, please be careful adding these people with multiple names with the same waiting room. So just let's remove these mats as well. Thank you. Yeah, so okay, so tax rate is 11%. You take $300 revenue, no royalties. You take $20 a BOE operating cost, $30 a BOE tax, $250 is roughly where we are. Plus the Leucrotta acquisition. It's about 5,000 BOEs because it's effective only in, I'm not sure when exactly. So let's give them 3,000, be very conservative. Let's give them a $60 net back. That's about what the Montney is getting today, where it is. Okay. We take this number, we divide it by the number of barrels. So this number, divide by the barrels, which was 7,000 plus 3,000, 10,000 BOEs added. They're getting $193 net back a BOE. So 10,000, 193. That's what we end up with. Very, very conservative numbers. My spreadsheet, when I put the numbers in, European gas was even higher, which is why these numbers don't quite reflect what we had in the price targets spreadsheet. If you take them adding some European gas BOEs, if you think the production growth might be a little bit higher on the Leucrotta, you might say it's actually 13,000 BOEs. Look how much the numbers change. It's just amazing. So again, this is my super, super conservative. I'm putting this on a recording, so I don't want people to go crazy numbers. When I ran the numbers, I was running about 13,000 BOEs additions. I was running about 250 because I think, as people know here, the Ukraine-Russia situation is very volatile. That pipeline, Nord Stream 1, could get affected anytime. The other pipeline, the Yamal pipeline, already got shut yesterday. The news came out. So what if this European gas goes to 300? These are the numbers that would be maybe familiar to you in the price target spreadsheet. I am not conservative. I am realistic. The numbers you see on the price target spreadsheet are not conservative. They are realistic based on my expectation of the gas. When I put those numbers in, AECO gas was much lower than it is today. So there's an additional bonus on top of that for the Canadian gas. So anyway, let me go back to the original numbers just for anyone who's wanting to look at the recording. These are numbers very undervalued. 2022 capital program after Leucrotta 500. Free cash flow sources minus $1 billion. Why? Because they're paying for Corrib and Leucrotta strictly out of free cash flow. That's roughly what it is. Okay, so let me get to some questions before I get to my mic drop moment here. Governments are talking about European gas. Yeah, so, okay. Alden makes a really good point. Vermilion's Australian oil gets $14 premium to Brent. That means instead of getting 93.30, add another $3 for Brent, 96, add another 14 for Brent, 110. So average that out to their Canadian oil, maybe they're getting 97. So again, it just adjusts accordingly based on how accurate you want to get. For anyone thinking that the European gas situation is just going to end, it's not going to end. Their storage is at very, very low. German storage is almost at zero. Consumption is going to keep going up because don't forget, Europe had a lot of gas to oil switching happening. So if the oil prices start rising, people may start go back to natural gas. A lot of plants got shut in, aluminum, steel, etc. What happens if the European gas drops a bit? Those plants are going to fire up, adding to demand. So the European gas price is not going to drop. If it drops, there's more demand that's going to take over. So it's a great position to be in as an investor. Possibility of adding 2023 hedges, I don't know. The price right now is not good enough to hedge. If you look at the NBP, I shouldn't have closed it. If we look at the NBP futures, they're good for about a year and then they drop off considerably. Vermilion's not going to hedge at $16. They're going to wait for the entire strip to move up as it goes. And what I'm noticing is as the months go, this last month with this big drop off pops higher. And then the next month pops higher. And then the next month pops higher. So this is not realistic to what the pricing is. It's just if you want to buy contracts, which there's no volume anyway. Maybe that's because it's the weekend, but this is not realistic pricing. It's just the way these contracts work. They just keep moving up as we go. Yeah, Tyler, yes, thank you for saying that. So for anyone on the Twitter spaces, it may make sense to you what I'm talking about, but if you follow the Zoom or the recordings, everything will make 10 times as much sense. So again, if you've got time, I definitely, please look at the Zoom, look at the recordings. You will get a better understanding. If TTF goes over $100, the company won't get valued on a share price. That's up to you to decide. I think they will. I think they're going to generate so much free cash flow. They're going to make acquisitions. They're going to get bigger strictly out of free cash flow that the market will give them the valuation that they need or that they should have. If not, I'll just keep buying more shares and other people will just keep buying more shares. What does that mean? At some point, the value will reflect. What do you think about dividends? Vermilion, if you're listening, No dividends, please. No dividends. I only have December 2022 options. No dividends. I don't get the dividend as an option holder. So I harp on other companies for not having dividends, but if Vermilion, you're listening to this, keep making acquisitions, keep growing production, pay a nice little dividend, 2-3%, but don't go crazy for what it's worth. If I had stock, my tune would be different, but I don't have stock. I only have these options, which very happy, very, very happy. Okay. Yeah, it's a very good question as to why the share prices don't re-rate. Patience. This share price is up 200% in the last 3 months. That sounds pretty good to me. And if we get another 200% in the next 6 months, that's fine. It's not going to go up 10x in a quarter. We know that doesn't happen on these oil equities. So give it time. Relax. Give it time. And let the cash flow speak for itself. Part of the capital is drilling 2 Australian wells. Yeah, I look forward to these Australian wells coming online. They're very productive wells that get $14 above Brent. Thank you for sharing. How do you view Vermilion's debt position? Don't pay back the debt. Again, Vermilion, if you're listening, your VP of IR was snooping around on my LinkedIn. I saw you as one of the viewers. So if you're listening in, don't pay back the debt, please. Keep the debt. I love debt. In a rising oil price environment, companies generating a ton of free cash flow, debt is awesome. Debt gives the equity that much more leverage. Very happy. Please keep it. I'll talk about the Leucrotta acquisition here. Eric says they pay too much. Keep in mind the biases that certain people have and what they're going to say in public if certain stocks are or aren't part of their portfolio, and depending on whether they may or may not want to buy in. Think about that one. I've thought about it many times, and people have their own biases and reasonings. Okay. I'll talk about the Leucrotta stuff here. The SPR release also flattened the curve. Yeah, that's great. Ray, I'll leave your question till the end here, but I manage my portfolio with a certain allocation. I run my portfolio differently than just what's the best name to buy, because I invest on margin. I have options. I don't want to be going in and out of names either. So my answer to your question may not be the answer that you can have to your question. So I just want to make that clear. Why I buy certain things depends on my portfolio allocation a lot as well. The low life reserve discussion that people talk about Vermilion, it's not true, it's false. Their 2P reserves are actually more than a lot of companies. And I will show you why. Okay. Do you think December 2022 is long enough for this to play out? Oh yeah, definitely. I think December 2022 is when the Europeans panic, is when the marginal gas molecule in Europe gets bid on. That's when the people stop valuing Vermilion on their 2022 hedges. They will start valuing them on its 2023 free cash flow, the 2023 cash flow, the 2023 production. It's right in the sweet spot. And my options are $10 US and $15 US. My downside risk is basically zero. Famous last words, as they say. I'm very confident in telling you the downside risk is very low, in my opinion. Humility is important, but so is confidence. Companies that don't have confidence in the macro, that keep beating around the bush, yeah, you have to be humble and understand the downsides, but you have to be realistic about what's happening. So for anyone telling you that European gas is going to crash and the WTI is going to be $30 because of a recession, yeah, that's not going to happen. And I'll stick my neck out and I'll put it on recording. That is not going to happen. Okay, you're right about Eric. Yeah, I don't want to talk too much about what Eric does and what he doesn't do. He has his own mandate. His fund is orders of magnitude bigger than mine. He can only buy certain companies. He can only sell certain companies. It's just a totally different ballgame. Options, your broker and your broker should have all the options available to buy from them. The dividend will also provide boost. Yes, great point. Yeah, so again, yeah, thank you. Yes, so I have the Vermilion December 2022 US $10 and the US $15 options. If you look at my options review seminar, I show you exactly what option I have and exactly when I bought it. I like to have full disclosure in what I do, so you can see exactly the date I bought it and what price Vermilion was at that point and why I bought it. So yeah, thank you. Great, so let me get to my little mic drop moment here. So, you know, we're spending money on acquisitions in 2022. So people are still valuing it like, you know, this free cash flow is going out, blah, blah, blah. So it doesn't really compete on 2022 free cash flow yields, and the hedges kill them. 2023. Yeah, that's good. There's no other Canadian large cap or mid cap that even comes close to that. Maybe IPCO, nothing else is even close. And that's taking European gas pricing as it is today. If Ukraine blows up Nord Stream 2 or Nord Stream 1, if Asia starts fighting for these LNG tankers, before this European gas crisis, 30% of American LNG went to Europe. Now it's 70%. What does that mean? That means 40% of the ships are not going to Asia. What if Asia starts bidding up these LNG ships again? What if European gas price instead of 50 goes to 80? Look at these. Look at these price targets. How much they change? They go up another $60 a share. I can probably count on one hand the number of people on this call or on the chat. And again, I didn't think this either. There's probably very few people who thought Putin was ever gonna attack Kiev, was gonna go past Donbass and Luhansk. There's very few people who think Ukraine's gonna blow up Nord Stream 1. What if it happens? So the world has become a crazy place. Things are happening that nobody thought would happen. The Arab Spring, nobody thought the Arab Spring would happen, that Gaddafi would get killed, that this would happen or that would happen. These things can happen. Invest accordingly. From a strictly investment perspective, look at your expected values of things that are going to happen. Don't just say, oh, there's no way Ukraine's going to do this. There's no way Russia's going to do that. There's no way XYZ is going to happen. It could happen, and it might happen. Okay. And again, I don't want to be coming across as a prophet of any kind. I'm just telling you the way I invest. I look at things realistically, not conservatively, not overly confident, not overly optimistic or pessimistic, but realistic. To the best of my knowledge, my opinion, to the best of my insight, to the best of the due diligence I can do. I obviously can't look at everything. I can't look at every company, but I try to be realistic because the oil markets, there's so many people suffering from PTSD, people being so conservative that I like to bring a realistic outlook as to what may or may not happen. France. Vermilion is France's biggest oil producer. They produce roughly 2/3 of France's oil. Great place to be. France is looking for oil. Oil or gas to oil switching is going on. Oil is selling for a really good price in Europe. The demand is basically flat. It's not dropping even with what else is going on. Great place to be. Netherlands, the second biggest onshore gas producer. They have 800,000 acres of land. They've got localized offices in Harlingen, Paris, and Bordeaux. They've got people who know the area, people with local contacts, people who know what's going on, people who bought, if you look at Vermilion's acquisitions, what they do, they go in and buy 25% non-working interest. Then they go and buy 50%. Then they start doing farm-ins. Then they start understanding the area. They start being aggressive. There is no better place right now to be growing production than European gas and European oil. Okay. These are the wells in the Netherlands, I believe. They're all good wells. They're all producing more than 10 MMCF a day, which in BOEs is 1,500 BOEs per well of European gas. That's amazing. That's really good. That's where you want to be. Can they drill 3 wells this year and bring on another 5,000 BOEs of European gas? Yeah, if they really wanted. 5,000 BOEs of European gas at $50 an MMBTU. It's not baked into the share price. No one is baking that into the share price. Even I have not taken that into account. What if it happens? What if instead of 13,000, they have 18,000? It makes a big impact. They have 800,000 acres. The ball is in their court. They are running the show. The governments are scared. The governments are panicked. The governments have banned fracking, and they've done this and they've done that. The people don't have fuel. The people don't have natural gas. The people don't have food. Do you think they might come back a bit on their anti-energy stance? Yeah, if they don't want to get their head chopped off in the guillotine, we know what the European people can do when things get crazy. Okay. There's a question here as to, can oil prices go to $30 if COVID comes back? Yeah, yes, it can. The supply demand is too far out of whack. I don't think it's gonna happen. What's gonna happen if the government told people in Florida tomorrow that they're shutting down and for them to stay at home? Yeah, people are not going to be happy and people are not going to listen. We can take these tail end risks into account all we want. It's not realistic. It's just not realistic as to what actually is going to happen. So again, for anyone on this call, do your own risk tolerance, do your own due diligence, run your own numbers, run your own subjective calculations. I can only share what I do and what I see and how I invest. If you think I'm wrong, the spreadsheet is with you. I'm sharing my entire due diligence with you, and you're welcome to not invest in those companies or be more, don't put 100% of your portfolio into energy. It's totally open. I don't like to tell people what to do. I just like to share what I'm seeing, and people can make their own interpretation of that. Yeah, okay. Yeah, okay. Anyone use bar chart for futures? TTF quotes came in several dollars below CME. Yeah, so I was looking at NBP, but TTF also may be interesting. And keep in mind, the supply demand right now in the world of oil is totally out of whack. It's totally screwed. So even a worldwide recession may not bring that back into proper, what's the right word? Into proper areas where the supply demand are equal. And European gas, it doesn't matter if there's a recession. You have to heat your home in the winter. Canadians know this better than anyone. You can't just shut your natural gas off and just chill there. You are gonna die in that case. Yeah, the energy crisis, I can't speak too much about that. Will there be an energy crisis? Yes. So I'll leave that to my macro outlook discussion in late April, my next macro outlook. I'll leave that for then. I want to stick to valuation questions here, but thank you. Germany. What Vermilion did in Germany, the other contract is NBP. So TTF is Netherlands, NBP is in the UK, national basis or something it's called. Vermilion, look what they did in Germany. They started off with a 25% non-working interest. Then they bought some more land. Then they farmed in some more land. Then they bought a 50% working interest. So they slowly take over these areas. Why am I telling you that? What have they done in the Montney here? They've bought a little chunk of land that people are saying, oh, this is junk, this is overpayment, you know, blah, blah, blah. Look at what Vermilion does. They buy little chunks of land, they develop it, they farm into other lands. What have they done with this Explore coal? They farmed in a 12.5% interest. What are they going to do for the rest of the Montney? We don't know, but history often rhymes. History doesn't repeat, but history often rhymes. So Germany, again, they've got all this gas acreage, oil acreage. They've taken over operatorship slowly. They told the people, look, we know how to operate this. You guys get out of the way. They've taken over operatorship of these this other oil fields. I bet you 3 years from now, they'll have operatorship of it. They've got all this land all over the place. Germany is Europe's biggest gas user, natural gas user. Germany is the one that will have the biggest impact if Russian gas stops. Where does Vermilion have lots of acreage? Germany. Ireland. After the Corrib acquisition, Vermilion provides 57% of Ireland's gas needs, natural gas needs. They own the gas plant. They own the gas field. Who owns the other 43% in this Corrib gas field? Your favorite, CPP, Canadian Pension Plan, who were supposedly divesting from oil and gas assets. Can they divest the rest of Corrib at pennies on the dollar? Who will have first rights to buy that? You guessed it, Vermilion. Yeah, CPP is not divesting. That's what they're telling me. My point is, what if it does happen? What if 2 years down the road, there's so much pressure on the CPP to divest from this? Who has the first rights to buy, right? Things change. Things change from what people tell you today. These pension funds and endowments are under huge pressure, public pressure, social pressure to run things a certain way. No one knows that the CPP owns Corrib. A lot of people don't even know this because they own it through another fund that they own, which has no reference to CPP. What if the media gets a hold of this? What if CPP figures out, or what if the CBC figures out this is what's happening? What if Trudeau figures this out? Things can change very fast. Again, I'm not advocating for anything. I'm just saying, just keep that in mind. Okay, Slovakia and Croatia, they own another 900,000 acres here. And look at this. The Canadian company Vermilion has discovered 2 fields in Croatia. The gas should be released into the system by the end of the year. Okay. How much gas is it? About 25 MMBTUs. So how much is that? That's about 4,000 BOEs. Does Vermilion tell you that in their corporate presentation? No. Do analysts tell you that in their projections? No. Is anyone taking this into account? No. So can they increase European gas production by 10,000 BOEs? Yeah. So the numbers just keep looking better and better, and no one is paying attention. So these December options, is this field going to be online before these options expire? Maybe. So again, I'm not telling you what's going to happen. I'm telling you there's things that the market does not know. There's things that people are not paying attention to. There's very few oil and gas analysts left. Compared to 2000 to 2014, no one is doing this kind of work. There's very few people who are doing these sorts of deeper dives. If you can front run this, let the companies generate free cash flow, let them increase dividends, sit back, relax, enjoy the summer, there's an opportunity here to make a lot of money. Canadian acreage, not the best fields, but they just tick along, steady Eddie. You know, they do their thing. They've got 7, 8, 10 years of reserves. They do their thing. Leucrotta, look at where they bought the Leucrotta acreage. Montney thick, Montney thin. This is where the best wells are gonna be, in this area. This is more oil focused. This is more gas here. This is more oil again. This area is oil rich. This area is gas rich. Same with this. People are throwing out random accusations about the Leucrotta acreage. We don't even have results yet from these wells. All they gave us was 3 or 10 days of results from their first pad, which were pretty damn good for Montney wells. 52% oil or something, that's good. How can somebody even tell you that the acreage is not good without knowing the results of these wells? So yeah, it's just strange to me. I think these lands are gonna be some of the best lands in the Montney once they produce them and build out the facilities and the acreage. I think it's gonna rival the 7 gens Kakwa stuff. You know, easy to develop. There's upper Montney, middle Montney, lower Montney, exactly like 7 gens Kakwa acreage. You know, there's conjecture out there that this was shitty lease, this was bad acreage. How can you say that already? Like, this is 200 and something thousand acres. Look at the land. Look at how undrilled it is. Look at how untapped it is. This orange is Leucrotta. This is ARC Resources, Ovintiv. ARC as well here. Drilled up acreage. There's not much place left to increase production. Look at Leucrotta's land. I see lots of potential here. I see more than 28,000 BOEs of potential. This could be a 50,000 BOE producer. If Vermilion keeps generating free cash flow, if they want to aggressively develop this, can it grow to 50, 60, 70,000? ARC Resources, or 7 generations in their Kakwa area with a similar sized acreage, maybe a little bit bigger, grew from 0 to 200,000 BOEs in 5 years. And back then, no one even knew much about the Montney and these longer fracs and these more stages and you know, whatever else is going on, these cube productions and whatnot. There's a lot of potential here, a lot. And they bought it at, you know, X dollars, you know, 7 times cash flow and all this. What if production hits 40,000 BOEs? What if production hits 50,000 BOEs in 3 years, in 4 years? Vermilion's gonna look very smart. What have they done in France? What have they done in Germany? What have they done in Netherlands? What have they done in Corrib, in the Ireland? What have they done in Croatia? This management team understands: buy land, buy acreage, let the people come to you and beg you to grow production, grow it all out of free cash flow so you don't dilute the shares, you don't add on debt, pay huge dividends. That's the business model. That's what they're gonna do again here. Free cash flow allocation. When I did my first Vermilion seminar, this was the free cash flow that we had. They funded the Coreb acquisition. They funded the Leucrotta acquisition. They're paying 24 cents a share in dividend. And they still have more free cash flow left than they did when I first went through Vermilion and when I bought my options. Does something seem wrong to you about this whole chart? Like, it just doesn't even make sense. They're generating more free cash flow now than 4 months ago. They added the dividend and they're paying for both acquisitions out of free cash flow. Why are people complaining? This thing is set up to be a rocket. And I hate using the rocket term, but lots and lots of potential here. They've been very, very good with the acquisitions. The Coreb acquisition is going to pay back in less than a year. Before Christmas of this year, they'll have paid back Coreb despite hedging 70%. If they hadn't hedged that, they would have paid it off by like August. Which other acquisition today has paid back in 8 months? None. There's been none. So very good acquisitions can set them up very nice going forward. Money wasn't returned to the shareholders. Yeah, in this case, it's fine with me because the Coreb acquisition makes me more money in 2023 and 2024 if I choose to buy the stock. It's looking really good. I think they're going to do more acquisitions. I think they swallow up the Montney here. If they can get good European gas pricing and get some of their wells online and make some money, why couldn't they buy Crew or Kelt or Pipestone or a Hammerhead or whoever else? They could buy the entire Montney that's left, ship the gas through LNG Canada to their own LNG terminals in Germany if they wanted to build some there, to their own LNG terminals in Europe, and then sell the gas there and make money across the whole value chain. Are they going to do that? I don't know. I'm just throwing ideas out there of what may happen here with the way the ball is in their court in Europe and how much they control in Europe with acreage, with lands, with government contracts, with everything else going on. It's great. And the acquisitions have been great. Both i3 and Vermilion have not made stupid acquisitions where they've overpaid. They've made acquisitions that are setting themselves up for the next 3 to 5 years of $120 oil and $6 AECO gas and $40 European gas. That's all I can ask. Companies that understand the macro and act accordingly. You know, that's all I can ask for. When am I buying shares of Vermilion? You may see it in the portfolio sooner than later. I'll leave it at that. The reason why I don't have shares is because of the options I have. If Vermilion doubles from now till December, which is pretty possible, my Vermilion options were bought so cheap and so early that my options are going to 30x or 40x. So when I already have that kind of exposure, why would I go out and buy shares, right? So again, my portfolio allocation, the way I run my investments is much different than you buying today or you running your portfolio. So just because something looks good doesn't mean it's going to be in my portfolio. Because again, if Vermilion hits $130 a share, let's just say by December, let's say European gas goes way up, Vermilion hits $130 a share by December, my options are going to be 50x. So just think about that. If I put in X amount of money 3 months ago and I see a pathway, is it going to happen? Maybe not. But can it happen? Yes. I see a pathway to a 50x on the options. Do I need to buy shares? Do I need more exposure to Vermilion? Maybe, maybe not, right? So again, this is not investment advice. This is not me telling you what to do. This is me sharing my due diligence, and we invest accordingly based on the exposure we have to certain things. Right on. So I've been rambling on about this company for a while, so I'll stop there and we'll get to Serica. And then we'll open up for a quick Q&A. I don't want to go on for too long, maybe till 2:45. Mountain Time, and then I'll leave it there. Just because I have a flight tomorrow to catch, I got to do everything. But I appreciate everyone's time again, and thank you for these numbers. Sorry, thank you for the suggestions, I should say. Okay, so we'll get to Serica. Serica is a name that doesn't trade on the Canadian exchange. They only trade on the London Stock Exchange, I believe. And again, if you want more information about Serica, Alexander Stahel is your guy. He posts a lot of up-to-date information. He knows more about the company than I ever will. I just want to bring it up because it's a European gas play. And people were telling me, well, you're too focused on Canadian plays, so bring this one up. And I said, okay, yeah, sure, let's do it. So I'm going to value Serica differently because they haven't released their second half 2021 results. I don't have Q4 results to work off of like I did with i3. So we're going to guess. We're going to guess, do our best, and see what comes out. Okay, so what do we know? What we know is production was 19,000 BOEs in the first half of 2021. It's now 30,000 BOEs. 85% is gas, okay? So what are they telling me is gonna happen in 2022? Okay. 2022 production guidance is between this and this. Let's take the midpoint, 30,350. 30,350. How much percent is liquids? Well, they just told me 85% is gas, so 15% is liquids. That is all going to be oil for the most part. That's gas, okay? Shares outstanding, it's about 270 million shares. In the sake of time, I'll just leave it and just tell you that's how many shares they have. The share price in Great Britain pounds is about $4 pound per share. So $4 in Canadian dollars, 656. We have our market cap. How much debt do they have? Debt free. They have $218 million of cash on the books. $218 million or pounds multiplied by the exchange rate to Canadian dollars. Okay, negative because it's cash. Negative debt because it's cash, okay? Dividend, I'm gonna leave it. Adjusted funds flow, we have no idea. They don't give us adjusted funds flow. We don't know what they made, okay? So let's try and reverse engineer it like we did with the Vermilion's production growth. So we figured that the European gas molecule today was selling for $50 Canadian and MMBTU. That's $300 a BOE. Okay. Operating costs are about $16 US a BOE, so $20 Canadian. 300 revenue minus 20 operating cost, 280. Royalties, I don't know what the royalties are in the UK. Let's say 20%. So 300 times 20%, 60. So take another 60 off of 280, you get 220. What are taxes in the UK? I don't know. Let's say 20%. 20% of 220, 44, $176 a BOE is the net adjusted funds flow, roughly. Let's take out another 15 for G&A, interest. Well, they don't pay interest, but G&A, it's not 15, it's probably like $3. So let's take 3, let's take 6. 176 minus 6, $170 a BOE for gas adjusted funds flow. Okay, so we'll take our number of gas BOEs multiplied by 170, multiplied by 365. They also have oil. So take the oil. What's a barrel of Brent getting net back today? We don't know. A barrel of Brent is selling for roughly $130 Canadian today on strip. Let's take let's take half of that. Take operating costs out of it. Let's take the tax, etc., everything out of it. We'll take half of it, multiplied by 365. And we'll divide it by a million. Or sorry, not 365. I should say 92, because that's the last. That's a quarter that we're looking at. Okay. Capital. How much money are they spending on capital in 2022? So capital expenditures in 2021 was about 55 million pounds. 2022, we don't really know, but let's say because they're doing some work on the new fields, let's say it's 70 million. Let's add 30% to the 55 pounds. Again, this is one company I'm being very conservative on. The other ones I'm realistic on. This one, very conservative, because I just don't know the company. They don't give me numbers to work with. So let's be conservative. 70 million pounds times 1.64, $115 of capital. Free cash flow is adjusted funds flow minus capital. So this minus the 115, that's our free cash flow. Okay. Because we estimated the numbers, there's nothing about hedging to take into account. So we'll just leave that. Last quarter, this should be Brent. I'm just going to use WTI for now. And other gas, 100%. We know the other gas price from Vermilion was 35, and we know the projected gas price is 50. I think there's a reason that people like Alexander are very bullish about this company. It's making a ton of free cash flow. Like, this is the highest I've ever seen, ever. Hedging, they do have hedging, so we need to put it in right here. Okay, so therms per day, 10 therms is 1 MMCF roughly. So 350, 350, 300, 250. So divide that by 10. So we have 35,000. We have 35,000, 30,000, and 25,000. Okay, at what price? Again, divided by 10. Price per therm, if you want to get it to price per MCF or price per MMBTU, divide by 10. So 2022 again. So 5.7, 4, 4, 4.7. 5.7, 4, 4, 4.7. Okay, losing a lot of money on hedges. Naturally, on European gas, it's gone way higher than what they would have thought. Even with the hedging, insane, just insane. The people are saying, oh, they're only going to make this much money for the next little bit. European gas is going to tank, and then this company is going to be fairly valued again. Think about what are the chances of that happening. Think about what are the chances of European gas not going down and European gas price actually going up or staying where it is. And invest accordingly. That's all I can tell you. That's all I can say. It's only on the London Stock Exchange, and part of why it's not in my portfolio. It's on the OTC, I believe. So SQ something. So again, all I can do is give you the information. We already took 2022 numbers into account. So there's no production growth. Fair share price, more than a 10x potential here, possibly. Capital program was about 115. Okay. Because this company is generating more than its free cash flow, more free cash flow than its entire EV this year, the 2023 projected yield becomes negative, and I've never seen that before. I need to put some more error checking in this spreadsheet just because of this name. So I'll leave it there. I'll share some maps here. So that's our existing fields, the Room, Bruce, Keith, Frigg. We got North Egg and North Eag and South Eag here. Those are the ones they're going to be doing capital exploration this year. They've done some geology here and tell you what's going on. The South Eag, I don't know how to say this. It might be Egg or Eag prospect, and the North Eag might be bigger than this Room field. So it said Egg. Okay, perfect. So if you believe in I3's Serenity and Liberator field exploration, and you want to get exposure to some exploration, you know, you want, instead of buying this Recon Africa and a Pantheon and all sort of junk, maybe one should look at buying something that's actually legit and has actual oil success potential of a huge field. Not investment advice, but if there's that wildcatting bone in your body that just is not happy with Cenovus, it's not happy with Meg and the development plays, and you want this injection of exploration in there, why not buy something that's already producing and has all this extra exploration potential? Not investment advice. I'm not telling you what to do. I'm just throwing opinions and questions out there to you. Okay, great. So I will stop it there. That kind of ends the valuation session. I'll leave about questions here. If anyone has any questions in general. I know, Sohaib, you want to get Alex on here to talk about Serica, but his thing is not going to record properly on the video. So Alex, if you have 15, 20 minutes, I just want to end, if there's any Q&A at all. We had a big session last week on the Q&A, so I'm not sure there will be any. But if there are, please feel free to ask them in the chat here. And we will, after that, we'll go into the Twitter. And yeah, I would love to hear Alex's thoughts on Serica and I3 and Vermilion. So what is I3 corporate decline? I believe it's somewhere between 20 and 25%. And they're doing a really good job with the new optimizations and new reactivations. So yeah, so I think the decline rate is mitigated by their reactivations at a very cheap price. Sohaib, go ahead.
I just wanted to say, so just yeah, so what I wanted to say is, if you take your speaker and you put your speaker next to the mic, then that would work out. So it would, whatever you would say would share onto the Zoom.
Yeah, so I did try that before with my phone, but it didn't come through. And just give me 15, 20 minutes here or whatever questions we have, and then we can move to the Twitter space. The other thing I can do is I can end my mic on the Twitter space if you want, and you can just continue the conversation there if you want to do that. And I'll leave the Zoom open for questions. Because I think Alex is only on the Twitter space, not the Zoom.
Got it. Okay, so keep doing that, and then we'll wait for you guys here.
Just give me a few minutes here, and we'll, because I did have a big Q&A last week, so I don't want to go on and on here. Is white cap still your best option? I did add to my white cap option position. Yes, I will update my portfolio today evening for the April 2nd positions. I'm always looking for different options. I found nothing better than white cap. Not investment advice, please. Here are the call options calculators and the call options PowerPoint that is on the website as well. So please use those. That's what I use, if you would like. Thoughts on Cardinal not having a dividend slide in the recent deck. I've spoken publicly on the seminars earlier that I don't trust that management team. I don't want to get sued for defamation, but I don't trust the management team. Hence why it's not in my portfolio, despite being an unhedged producer with a lot of tax pools and making a lot of money. It's not in my portfolio. I was thinking about it at one point, but now, after what's happened here, can they still make a dividend? Yeah, possibly. But the lack of clarity and the mishmashing around, are they going to do an acquisition? Maybe. Is that in the back of my mind? Is that in the back of your mind? Maybe. Do I want that? No. Do I want that hesitation in the back of my mind? No. Thank you, Craig, for attending. I appreciate you coming on board. I had a lot of fun getting the pictures ready for the i3 Vermilion and Serica. These were names that I really wanted to talk about in detail, because like people ask me and they email me, why is my price target this and why is it that? Well, I love data. I love pictures. I love talking and rambling on and getting the point across to the point that I will get no questions again. And I cannot get it across in a Seeking Alpha article, which I have one out about Vermilion already. I can't get it across in a Twitter message. I can't get it across on Spaces. This is my way of getting it across to the point where if there's more questions about Vermilion at this point, I will be shocked. Like people asking me why the price target is this, because I think I like to make the case clear as much as possible, but I need that 45 minutes for the company. I need that hour to make my case. I need the pictures. I need the spreadsheets. So yeah, thank you for attending. Really enjoyed this one for sure. Do you feel ARC Resources is executing within your expectations? I mean, I've publicly said no, so I don't think they are, but I'm just gonna leave it for now. Gas prices are looking good, NGLs are looking good, condensate is looking good. Yeah, I'll just leave it for now. I don't want to get too crazy and move companies, in and out. Should I have all my ARC and bought Spartan Delta with it 2 weeks ago? Yeah, I do regret that. I really do. I had a really good chat. With Spartan Delta management last week. They are very aligned with what I want. I know their lands better. They were willing to reach out to me and have a chat. They will be on Twitter Spaces here in April. It will be our biggest company yet, about a $2 billion roughly company. I think there's going to be a big divergence in the next 6 months to 12 months between companies that get it and companies that don't. And I need to invest accordingly. And I will advocate accordingly. If people are doing the right things, I will publicly put confidence in them, like I am here with Spartan Delta. With ARC Resources, they were also very happy to chat with me. We had a really good chat with their investor relations group. But I didn't get the response that I really wanted from them. It was a little conservative. I'll give them the next 3 months and we'll see where things go. Who do you follow on Twitter for i3? Yeah, so the Twitter handle is Rock Creek Freak, exactly as it's spelled. And not just i3, he's got really good stuff across the industry with picking out these things and getting them to me. I look at them, I make my own interpretation. I've got other sources like him who kind of tip me off to well results, acreage buyouts and such. And, thank you, because I can't do this all myself. Anyone telling you that they're doing this themselves is lying to you. This kind of work that I do spend a lot of time on the markets. I do spend a lot of time doing this research, but you know what? I probably spend 15, 20 hours a week on the phone, talking to my contacts in Grand Prairie, talking to my contacts in Saskatchewan, in Calgary, management teams, talking to my people in Red Deer, in Fort St. John, in Rimbey, in Dawson Creek, all over the place. These are people who tip me off about things I should spend my time on because they tell me where I should focus my time on, what, excuse me, what I should be focusing on. If not for them, I would be lost. And I will say that publicly, I would be lost without them telling me, tipping me off to things, hey, this is what's going on in the field. Nothing that's material or conflict of interest or illegal insider trading, but just what's going on. How many trucks are going down the freeway or the highway? How many tankers are loading out of a certain area? Check out these well results on Petro Ninja. Check out this area. Check out this, that. So yeah. With the increase in option premiums, are the premium deals not there? I found them on Whitecap. So it took me 3 months or 8 weeks or something to find something after my early January purchases, but I did find something. Yeah, I did. I did find something good. There's a pending transfer of 350 wells from Cenovus to I3. Could be something new. I just am talking about people tipping me off to things. Right there, maybe something I should be looking into. Maybe Cenovus is doing another asset sale to I3. Yeah, thank you. I'm very enthusiastic about Vermilion. I knew I was going to get questions about my price target, and I am happy that people have given me the opportunity to back it up and what I'm seeing. Yeah, Bunka, I don't really know. I can get back to you, but I don't know right now. Where can I go and watch the video again? It will be uploaded on my website, whitetundra.ca, in probably 3 hours, and on my YouTube channel as well. So please have a look. I will not be upping my Cenovus holdings. No, I'm happy to hold on to them because I think the refining business is making a ton of cash, a lot. And it will continue to make a ton of cash because diesel inventories are low across the world, and gasoline is not looking too hot either. And jet fuel is also looking pretty good. So I'm not going to buy more, but I'm going to hold on. I also have June options for Cenovus, so that's enough exposure right now for me. ConocoPhillips, I believe, has done selling their shares, so another tailwind. What has made you turn negative on Saturn Oil? That's a loaded question. I spent like a month of due diligence on this company, so I'll leave it for another seminar or maybe a Spaces session. I'm not buying shares, and my warrants will be sold as soon as I get a chance. Full disclosure. Frontera, Gran Tierra. Yeah, I like Colombian gas. I just not as comfortable with it. And they don't offer me the increased upside and reward to mitigate the increased risk compared to a Serica or a Vermilion or an I3. The geopolitical risk there, maybe a little bit, and I get way more upside. That's what I want. I don't want, like Frontera, yeah, they've got lots of upside, but I don't think their Guyana play is ever going to pan out. They're just too small a player in that area. And the Colombia stuff, I'm just not comfortable with it, fully honest. Westcan, thank you. I spent a lot of time doing due diligence on Westcan. I cannot share with you what I've done in one text or one report or one Twitter Spaces. It just doesn't get the point across. It doesn't allow me the opportunity to share what I've learned, to share what I want to share. That's why I have a special session on it coming, just on that and Razor, because I've spent a lot of time doing due diligence on these companies, looking at well results, looking at operations, looking at what's happening. I used to work in the exact field, maybe 10 kilometers away that Westcan is drilling in. Please don't buy it just because I'm telling you this. That's not the goal here. I will share my full due diligence on April 16th, and I'm look forward to sharing this due diligence, and happy to participate in the private placement. I'll leave it at that for now. I don't want to say too much until the April 16th seminar, when I will share everything that I know, all the maps, all the results, all the information. Thoughts on Cenovus? Yeah, so I just shared my information on Cenovus. Yeah, please check out the options video. It's one of the less viewed videos, but I get lots of questions on options. So I just keep directing people there. Yes, so I will talk to Spartan Delta Management about the OTC listing, the DAXLF, and I will get that sorted for you here in the next month or so. And I'll let them come on Twitter Spaces and face your wrath and the US investors' wrath accordingly. That's their problem and they got to fix it. Yeah, New Vista, I've spoken about New Vista before. They have these take or pays, which are going to do really well for them. So I'll leave that there. Yes, yeah, Westcan, I got the Zoom coming. I'm going to end this here. Yes, I'm satisfied with Meg. I added to Meg on Thursday. I upped my position by roughly 25%. And I will continue to keep buying Meg if it continues to lag. It could be a buyout candidate as well in the near term. Yeah, Vermilion, yes, because I bought the options so early on, the upside leverage they give me is more than enough versus buying the shares now. I'm not worried about the dividend because the yield is just not there. And yes, you are understanding that. And please message me if it's not clear and I can share with you more. The upside risk for Vermilion's European gas is not even baked in. So I'm going to leave the, I don't think that there is any much downside from here onwards. If its citizens get sick and tired of the energy cost, Nord Stream 2 is not going to be online for 3 or 4 years, I believe, or maybe 2 years. So it doesn't matter. And you have to heat your home. It doesn't matter. Yes, but yeah, thank you. I am very bullish on Hemisphere. It doesn't fit into my investment portfolio, just the way it's built. Unfortunate. So Habe, I'm gonna mute my mic on Twitter so you guys can continue the space and it'll be recorded just because I'm getting a lot of questions here and I still wanna answer them. And I'll let you continue with Alex and Razor here on Twitter, if that's okay with you. Surge, still a good buy. It's still my biggest holding, so nothing has changed. Everything is as is. So can Surge lag here in the next 45 days? Yes, because of their hedges, it might lag. But is that the stock I want to be in when the hedges roll off and the free cash flow goes from 200 million to 350 million overnight, 340 million? Yeah, oh yeah, for sure. And I'm going to be holding on to it. A management team that really gets it, the dividend is coming up. Why not? Why not? I'm going to stay in this name for a bit. ROK Resources. I like ROK a lot. It doesn't fit my portfolio at this point. And I don't want to buy companies with such huge warrant dilutions, headwinds. So I will not be a shareholder of ROK in most cases because this whole warrant dilution thing is what made me turn off Saturn Oil to begin with. So great management team. Bryden went out and bought shares in the open market the day after our Twitter Spaces. Thank you, Bryden. The confidence I have in you and Jared and Cam is very, very high, but it just doesn't fit my portfolio. And the warrant dilution, no, I'm not buying companies with that. When is your next macro? April 30th, I believe, is next macro session. I am going to be heading stateside tomorrow and doing a bit of traveling, so I won't have time to really spend on the macro. And I think April 30th is a good time, just before the summer driving season starts, and we'll have some more clarity as to what's going on. Prairie Provident, big fan, really, really, really big fan. Greg, I believe, the CEO. Yeah, I've been talking to so many people recently. I can't remember his name, but the CEO, used to be with Grand Tierra and knows what's going on. I will tell you, there's very few CEOs who I talk to who understand the field operations as good as he does. Not Greg, Tony Berthlet. He brought the field staff in to present directly to the board of directors what they want done, how they can increase revenue, how they can decrease operating costs. That gets a big respect from me as someone who's worked in the field. A lot of our ideas used to just get thrown out because we were the stupid operators and we were the stupid guys on the field who don't understand science and all this, and we just want everything. And not saying bad things about the companies that I've worked for. It's just, it's hard to get that sort of input into everything when you're dealing with things on a 30,000 level view in the office. And Prairie Provident is small enough that they can do it. And he told me something about their new drills in the Banff formation that's a guy who knows what he's talking about. He's not just status quo. He's taken over a company and he's going to turn it around. Why is it not in my portfolio? Because I can only have a certain allocation in non-marginable securities and options. So unfortunately, it misses the cut. They've hedged about 75% of production, so I don't get the torque that I want right now. But 6 months from today, if it's still sitting there very cheap, can it become a part of my portfolio? Yes. Yeah. Oh, yeah. Definitely. Vermilion and Surge were top performers in March. Yeah, very happy for sure. Surge is taking a little bit of a breather here, but the buying pressure is very strong at Surge. It's been green on some of the red days on the markets. Great. Do you see MEG, Cenovus, and Whitecap getting to your $80 target price by the summer? Those are 12-month target prices. Whether it gets there or doesn't get there, I'm not really concerned about it. People are expecting way too much. Like, you're supposed to make 10% in the markets. We already have a 60% in MEG and Cenovus and Whitecap in the last 3 to 6 months. Be patient. Be patient. If you're, I've had so many good friends and family and business partners sell because they got impatient with these. The stock ran up 30% and then it didn't move for a couple months and people got impatient. And now you're having to pay 30% more for that same share. So be patient. There's only so much money in oil. Not investment advice. This is just what I think. This is how I'm investing. I have not sold anything. I haven't sold any share of ARC or Surge or Cenovus or MEG. The only things I've sold are my options, which I had to sell because they were expiring. Despite my frustration, I still have all my shares, and I'm probably going to end up doing better than people trying to day trade and time the markets, go in and out, trying to flip things. If you do well in it, I'm very happy for you. Are you going to end up doing well in the next 12-month time frame versus just holding on? I don't think so. Europe can fire up coal plants. Yeah, potentially coal and nuclear. I don't know the situation that well, but they've ended up demolishing a bunch of their coal plants, nukes and whatnot. So, and none of the politicians are going to want to admit that they were wrong. Human ego, keep that in mind. Human ego and human nature plays a big part in your investments. Understand them and invest accordingly. Yeah. Petrotal is suffering. Petrotal is having issues with this Peru thing. So when is it going to get solved? I don't know. I really don't know. I'm not going to be buying Petrotal right now, just because I found other plays that are, between Vermilion and I3 that are kind of similar in a way. But I will look at Petrotal. If it continues to lag, if it goes to 50 cents, 55 cents, and I can buy a big block, I think I will, yes. but not at 63 or 65. I want the best deal I can get. I don't think this social issue is anywhere close to being solved this time around. I think it's gotten bigger. There's some political issues, corruption issues. So I'll let it play out. And if I miss out, I miss out. Yeah. What about Razor's 2 million rights dilution? I'm not happy about it. But I'll leave my thoughts to the April 16th presentation. The upside on Razor, if they actually get the geothermal, the power gen, and the CO2 pipeline done, are way larger than anyone tells you. And people are going to call me crazy again next week or on April 16th when I throw out the price targets for Razor. I will make my case and I will let people invest whether they want to or not. That's all I can do. I can share my due diligence and yeah, I think I found a hidden gem here. So 2 million dilution is not bad, but when you have 20 million shares out and you have 18 million warrants out, yeah, I'm not really interested in that. First helium, it was a helium play, it became an oil play. Should I have bought at 18 or 20 cents? Yeah, because I knew about the oil play. The day they released that 429 oil play, I looked into it. I ran the numbers. I should have bought shares. I didn't buy shares. Here I am. What was the date you mentioned surge hedge falling off? June 30th. June 30th is the day the hedges fall off. Yeah, I look forward to it. It's going to be a great day. Same with Spartan Delta. Hedges fall off June 30th. The oil becomes completely unhedged. 35% of their oil production goes from getting $50 a barrel to $110 a barrel. It's a big inflection point. I don't have an opinion on Australia's oil and gas. I looked at that Kalima Energy. It doesn't compete at all. Bad hedges, and yeah, that's where I am on the due diligence on that. The other plays, I don't know much about them, so I can't comment. I'll end it here in a couple minutes. So just the last questions. Tamarack Valley, I've spoken about Tamarack Valley. There's nothing changed. I think they overpaid for the acquisitions. I like their hedges. The Clearwater, if it pans out, is going to be a big boost, growing production, but they overpaid for acquisitions. Plain and simple. Prices have increased, yes. It's still hard to get back and make that money and prove it out to the market. Pinecliff, yeah, I'm a big fan. Pinecliff is great. Big fan of Phil Hodge. EcoGas is going to do good. I think the talks about the gas market being oversupplied, which I myself believed in for the longest time, may be wrong. I think those things may be wrong. There's just too much gas demand and not enough supply. We could see some interesting gas prices here over the next 3, 6, 12 months. I'm just getting into the market. Is there anything you would recommend I look at? I guess I'll pat myself on the back and just say, check out my last macro outlook. If you're checking out oil plays, you want to have conviction. I share my due diligence on what's going on. And feel free to reach out to me if you've got any questions. Check out the valuation seminars, the price targets sheet, and all the spaces that we do on Twitter. I think is great to learn. Baytex, yeah, big fan still of Baytex as well. Great acreage. The hedges are killing them. Baytex and Crescent Point, too much hedging. Hence why I'm not going to be a shareholder. I like Whitecap. Why buy Baytex and Crescent Point when you can buy Whitecap with 22% hedged and only 14% hedged? That too at $100 a barrel Canadian, starting July 1st. plus all their other benefits the white cap has over Crescent Point and Baytex. Not investment advice, just what I think, just my 2 cents. Right on, cool. Well, I'll end it here. Thanks again, everyone, for joining. Like I said, this video will be online. The template and the recording is online by later today. The template's already online. Ray, I don't know if I missed your question, but if I did, feel free to message me directly. You had asked something earlier. And yeah, I think I'll leave it there. I look forward to Razor and Westcan on April 16th, the macro on the 30th. In the meantime, we'll have our Twitter spaces. And yeah, if you want to be on the mailing list for the future seminars, let me know. Once again, it's all, nothing is investment advice. Please do your own due diligence. Please, your own risk tolerance, investment thesis, etc. Yeah, thanks again for your support. I really appreciate it. It means a lot. You know, we started these things with like 5 or 6 people in October, I believe, and it's really picked up. I get comments about how far these seminars go and the people that are attending. So yeah, it means a lot. Thank you again. And appreciate your time on the Saturdays, the Sundays, and everything else. Yeah, thanks again. And we'll catch you at the next one here.